Hello friends, welcome to yet another video at Finance MCQ channel and I am CMA Akula Sridhar. So friends, a new day and a new set of MCQs. So let's begin and try to solve them. So friends, the first question is National Pension System Trust is established by PFRDA as per the provisions of, for the option A is Indian Trust Act 1972, option B says Indian Trust Act 1882, option C Indian Trust Act 1872, and D option Indian Trust Act 1952, and last option none of the above. So friends, National Pension System Trust is established by PFRDA as per option B, which says Indian Trust Act 1882. Moving on, next question, which of the following business activity will not result in application of funds? The options are payment of interest, decrease of working capital, option C purchase of fixed assets, option D payments of taxes, and last option all of the above will result in application of funds. So friends, remember that decrease in working capital will not result in application of funds. In fact, decrease in working capital is a source of fund. Moving on, next question, calculate cost of equity using CAPM model where the details are given as risk-free return is given as 10%, beta is 0.5, market risk is 15%. So friends, here the formula for calculating cost of equity as per CAPM model is risk-free return plus beta of the portfolio, then market risk minus risk-free return. So friends, if you put the values in the formula, risk-free return is given as 10% plus beta of the portfolio is 0.5, then market risk is given as 15% minus risk-free return is given as 10%. So friends, if we solve this, the value will be 10% plus 0.5 into 5%. So that will be 10% plus 2.5%. So that will be 12.5%. So friends, here cost of equity will be option C, which says 12.5%. Moving on, next question. Public Provident Fund has a lock-in period of 5 years, 10 years, 15 years, 7.5 years, and none of the above. So friends, PPF has a lock-in period of option C, 15 years. So friends, I will be presenting a separate video on features of PPF as this is one of the most important saving instruments of our country and is relevant for your upcoming exam. Moving on. Next question, which of the following statement is incorrect regarding Indira Gandhi National Widow Pension Scheme? Well, the options are, it is introduced in the year 2009 under the purview of Ministry of Rural Development. Option B, it provides financial assistance to widows living below poverty line. And option C, it is a non-contributory pension scheme. Option D, widows aged between 40 to 79 are eligible for the scheme. And last option, none of the above. So friends, here remember that all of these statements are correct regarding Indira Gandhi National Widow Pension Scheme. So friends, if we see the highlights, first of all, this Indira Gandhi National Widow Scheme was introduced in the year 2009 and it is under the Ministry of Rural Development. And friends, it provides financial assistance to widows living below poverty line. And friends, it is a non-contributory pension scheme. So that means the beneficiary will not have to contribute to the scheme and it will be payable directly by the government. And friends, the widows aged between 40 to 79 are eligible for the scheme. Moving on, sunk cost is a type of irrelevant cost, relevant cost, standard cost, periodic cost, and abnormal cost. So friends, remember that sunk cost is a type of option A, irrelevant cost. So friends, sunk cost, also known as past cost, is a cost which is already incurred and cannot be recovered, like example payment of rent, purchase of fixed assets, and are considered irrelevant to current and future budgetary decisions. Moving on, next question, the chairperson of a stakeholder relationship committee shall be a non-executive director, executive director, independent director, small shareholder director, and last option, nominee director. So friends, remember that the chairperson of a stakeholder relationship committee will be a non-executive director. So friends, the correct answer is option A, non-executive director. So friends, every listed company having more than 1000 shareholders or debenture holders or deposit holders or any other security holders at any time during a financial year will have to constitute a stakeholder relationship committee. And friends, stakeholder relationship committee will have at least 3 directors. Moving on, next question. Which type of bond is issued to raise the capital in the United Kingdom by a non-UK company? Well, the options are Euro bond, Yankee bond, dollar bond, bulldog bond, and last option samurai bond. So friends, here the bonds are to be issued in United Kingdom by a non-UK company. So the option is option D, bulldog bond. So friends, bulldog bonds are issued to raise capital in United Kingdom by a non-UK entity. And friends, as far as Eurobond is considered, Eurobond, also known as external bonds, are international bonds which are denominated in a currency not native of the country where it is issued. While Yankee bond is issued by a foreign entity or company which is traded in United States and is denominated in USD. So these are traded in United States and are dominated in USD. And friends, dollar bond is a bond issued outside US by a foreign company or a government that is dominated in US dollar instead of local currency. These are issued outside US and is dominated in US dollar. And finally, samurai bond is a bond to issue capital in Japan and is denominated in yen currency. So it is related to Japanese market and is denominated in yen currency. Moving on, next question, which one is not a derivative instrument? Well, the options are futures, shares, options, forward contract, and last option, none of the above. So friends, here except shares, all are derivative instruments. And friends, derivative instruments derives its values from an underlying assets, and shares are usually an underlying assets. Moving on, next question, issue of shares at discount is allowed, is prohibited, is allowed with approval at general meetings, and option D, should not exceed 10%, and last option, is prohibited except by way of issue of sweat equity shares. So friends, remember that issue of shares at discount is prohibited except by way of issue of sweat equity shares. And friends, the provision related to issue of sweat equity shares is covered under section 2 subsection 88 of the Companies Act 2013. And friends, sweat equity shares are issued as a mark of gratitude to employees or directors of a company at discount for their hard work, dedication and contribution made towards the growth of the company. So friends, for more practice of such MCQs, please visit our website financemcq.in, where the entire paper 2 of NPS Grade B exam phase 2 of general stream is brought in MCQ format for practice and quick revision. Friends, here more than 2000 quality MCQs prepared by professionals such as chartered accountant and cost and management accountant is brought to you for practice. Friends, Finance MCQ presents the entire syllabus covering all topics such as commerce and accountancy, costing, economics, finance, Companies Act, management and pension sector in detailed, subject-wise, topic-wise format for thorough preparation of your upcoming exam. And friends, not only this, there is an email support for clarification of doubts raised by candidates while practicing these contents. So practicing at Finance MCQ is the most simple and fastest way to quickly and completely revise full syllabus of paper 2 of the exam. And friends, why paper 2 is important? Because it covers 50% of the total syllabus, with remaining 50% reserved for English subject. Good preparation of this technical syllabus will be a sure shot way for your assured success. And finally, with limited days left for your career defining exam, this practicing content is made available by Finance MCQ at direct 50% discount. So take advantage of this huge discount and subscribe to the course now. The link is given in the description box below. So friends, see you all in the next video. Till then, thank you very much for watching. Take care and goodbye.